welcome to the deep dive. You know, there's just so much information flying around, especially in really fast-moving fields like crypto. It feels almost impossible to keep up sometimes.
It really does. Information overload is real.
Exactly.
Yeah.
So that's why we're here. We want to be your shortcut, basically, cut through all that noise and get right to the insights that actually matter. Today, we're doing a deep dive into the crypto market. We're using a daily alpha report from June 28th, 2025 as our source.
Right. A snapshot from right now.
Yeah, and our mission, really, is to unpack the big moves, the, surprising stuff, the key indicators, give you a solid but concise grasp of what's really making waves in digital assets.
And it's not just about what's happening, right? It's about getting to the why. We want to help you connect those dots, see the patterns, maybe even anticipate what's coming next in this, well, incredibly dynamic market.
Absolutely. Couldn't have said it better. Ready to jump in?
Let's do it.
Okay, so let's start decoding where the smart money is going. We always like to kick off with these smart money moves because, well, big institutional flows, they're often a pretty strong signal.
Definitely. And what really stands out here is BlackRock's IBIT. Their activity's been, well, consistent and large.
Large how?
Well, in just the first 3 days of this week, they added, get this, 9,405 Bitcoin.
Wow, just this week.
Yeah, and that was after they bought 11,678 Bitcoin the week before.
Okay, so that's sustained buying pressure.
Exactly. It's more than just confidence, It signals a potential structural shift. Could impact liquidity, maybe even volatility for Bitcoin long term. It suggests the asset class is maturing.
Right, attracting that serious capital. And hinting maybe retail isn't driving the price quite as much anymore.
Could be part of it, yeah. It points towards broader adoption being taken more seriously.
Interesting. And it's not just Bitcoin, right? You mentioned Ethereum plays, too.
That's right. SharpLink Gaming, for example, they've been strategic with Ethereum, added another 1,989 ETH recently via an OTC deal.
OTC, so over-the-counter. A private deal.
Correct. And that brings their total stash to just over 190,000 ETH.
That's a significant holding.
It is. And what's really notable is that 80% of it's staked, earning about 3% yield.
So not just holding, but earning, too. That dual strategy, accumulate and generate yield, is that becoming more common for these bigger players?
Good question. SharpLink's a great example. But yeah, I'd say we are seeing a broader trend. Mature capital looking for, sustainable returns within crypto, not just price appreciation.
Makes sense.
And speaking of big moves, the report also flagged some major whale activity.
Oh, yeah.
A transfer of 2,037 Bitcoin, that's about $218 million, moving from Gemini to Coinbase. 2 transactions.
Okay, Gemini to Coinbase. What might that signal? Preparation for sale.
It could be. Moving to an exchange like Coinbase might mean they're prepping for a large sale. Maybe OTC, maybe not. Or it could just be a liquidity provider shuffling funds.
Hard to know for sure, but definitely worth noting that kind of size.
Absolutely. Any move that big gets attention.
Okay, moving beyond the absolute giants. It's interesting to see what's happening even in NFTs, like pudgy penguins.
Right. The report highlights them.
Whale holdings are up over 11% for pudgy penguins in the last month, and public figures, their positions are up 7%. That suggests some real confidence building there, even from high-profile people.
It does. It shows interest isn't just in the big cap coins. And then you have something like Salami.
Salami. What's happening there?
The report calls it unprecedented whale accumulation. Top wallets increased holdings by, wait for it, 2,114%.
2,000%.
Yeah, and new wallets snapped up 21% of the total supply. That's dramatic.
Understatement. What drives that kind of feeding frenzy, a specific catalyst?
Often, yeah. That kind of sudden concentrated buying usually means there's a strong belief in a future pump, maybe fueled by a new story or a big development coming soon for the project.
That kind of rapid growth, though, always makes you wonder about sustainability, doesn't it? Does it feel sustainable or maybe a bit frothy?
It's always a mix, right? Exciting, definitely. But sustainability is the million-dollar question, which actually leads nicely into our next point.
Perfect transition.
For so long, crypto felt like it was all about speculation.
Right, just token prices going up and down.
But this report really highlights projects that are generating serious actual revenue, which is, a sign of maturation.
Okay, I like the sound of that.
Yeah.
Real businesses emerging, like who?
Well, Axiom Trading Terminal, for one, they're pulling in nearly $1 billion annual revenue.
$1 billion? Seriously?
Yeah. And what's wild is that's despite relatively limited retail use.
Must be providing some serious value to a specific high-value group.
Exactly. It proves real products are finding real paying users, and they're not alone.
Who else?
The trading bot sector. You group Photon and Banana trading bots together. They're also doing around $1 billion combined in annual revenue.
Wow. So huge demand for automated trading tools.
Really? And then there's Flashbots.
Yeah, heard of them. Infrastructure, right?
Right. Exactly. They're in the top 10 revenue generators on Ethereum. It shows how crucial, sometimes less visible, infrastructure projects are actually major moneymakers.
That's a great point. And anything newer making waves?
Genspark. Relevant in the AI space, they hit $36 million ARR, annual recurring revenue, in their first 45 days.
45 days? That's insane growth. Real product market fit right out of the gate.
Seems like it. Now, are these figures perfectly sustainable forever? Are there caveats?
Yeah, I was going to ask, are they maybe based on current hype cycles or market conditions?
That's fair. Some are estimates, and sustainability is always debatable as markets shift. But the core demand for these things, trading tools, network infrastructure, AI tools, that feels pretty solid.
Okay, so it's a definite shift from just speculation towards real, demonstrable revenue.
Yeah.
That feels significant.
It absolutely is. A big marker of progress for the whole space.
So that's what's generating money now. What about the bleeding edge? What's next? The report mentions emerging narratives.
Yeah, two big ones. AI infrastructure convergence and what they're calling the privacy tech renaissance.
Okay, AI infrastructure first. What's the scoop?
Well, CoreWeave reviving its bid to buy Core Scientific is a big deal. Sent Core Scientific stock up 33%. It just highlights the mad scramble for decentralized compute power for AI.
Right, the demand is huge.
And related to that, Theta launched its Edge Cloud beta. It's basically a decentralized marketplace for GPU power, aiming right at AI compute needs, an alternative to the big cloud guys.
Interesting. Competition for AWS and Google Cloud, but decentralized.
Potentially. And Sahara AI rolled out its agent builder and AI marketplace in public beta. They've already got Microsoft and AWS using it.
So AI infra is definitely heating up, becoming more distributed.
No question. It's accelerating fast.
Okay, and the other narrative, privacy tech renaissance.
Some huge developments here. First, the Tornado Cash ban being reversed. That's massive legally.
Yeah, that sent ripples.
And then the EU confirming that zero-knowledge tech is acceptable. That's not just about one protocol. It's broader regulatory acceptance of privacy tech.
A green light, essentially, for ZK proofs and similar tech.
Pretty much, and we're seeing that translate into products. Selvium has a roadmap with private DeFi features coming in Q4.
Private DeFi. Interesting.
And Privacy Pools announced they're adding privacy features for stablecoins, bringing privacy right into one of the most used crypto tools.
So privacy isn't just a niche concept anymore. It's being built into core functions.
Exactly. Moving from theory to actual application.
Okay, so building on those AI and privacy narratives.
Yeah.
Let's talk specific plays. The report mentions top narrative plays, both big names and small caps.
Yeah. For the established players, Render is noted. They're launching real-time Gen AI and 3D video tools, even have an API in beta, pushing creative AI boundaries.
Cool.
And Fetch.ai, they've got a new Siri integration for their autonomous AI agents, making AI agents way more accessible.
Integrating with everyday tech like Siri to Clever, and on the smaller side, small caps.
A couple mentioned. Barvis ticker, BARVIS. It's an AI-powered agent for executing yield strategies. Launching July 1st on virtuals.io. Kind of a mix of AI and DeFi automation.
Okay, and the other?
Zoro, Z-O-R-O. A decentralized marketplace for AI agents. Already has 12 agents, apparently. Access costs 30 Zoro tokens a month.
So these smaller projects are finding really specific AI niches within crypto.
That's the pattern, yeah. Highly specialized services.
And then there's the really early stuff. The report calls them ultra-early mentions from niche Deegan circles. Sounds speculative.
Oh, definitely speculative. We're talking about TOE, tiny market cap, like 558K.
Yeah.
And they're claiming a unified physics theory discovery.
Okay. Bold claim.
To say the least. Then there's EVA, has an automatic buyback system linked to user transactions, apparently getting some buzz from KOL's key opinion leaders.
So influencer attention, basically.
Right. And lastly, Quantum. Interesting angle here. They're declaring opposition to token sales, going for an open source nonprofit structure instead.
That's different. Definitely fringe stuff, but you're right. Sometimes the wildest ideas come from the edges.
You never know.
Okay, let's shift gears. Time for a market health check. Started with TVL total value locked. Always a key metric for ecosystem health rate.
Absolutely. Tells you how much capital is committed and active within different protocols or chains.
So who's growing?
Well, Sing Network hit a new all-time high in TVL, $566.78 million. And importantly, they kept DAX volume over $250 million for 2 weeks straight.
So capital and activity, that's healthy.
Very. Also, Katana surpassed $200 million TVL, helped by a $30 million deposit campaign.
Incentive-driven growth, okay?
And the Hyperliquid ecosystem reached $544 million TVL across its 10 main protocols. Shows broad strength there.
Nice. But it can't all be growth. Any notable dips or contractions?
Unfortunately, yes. The Curve Resupply Fi world had a nearly $10 million exploit. That caused an $87 million drop in TVL for the associated Llamalend ecosystem.
Ouch. A reminder of the risks. Exploits still happen.
They do. And then there's usual. Its market value cratered, dropped to just $7 million FTV, fully diluted valuation.
From what initial value?
From an initial sale price based on a $1.2 billion FTV.
Billion with a B down to 7 million. Yikes. Extreme volatility.
It really underscores the risk, especially with newer projects or specific tokenomics.
Definitely. Okay, what about institutional backing? Recent funding rounds, where's the venture capital flowing?
Some interesting ones listed. Inference Labs raised $6.3 million. They're focused on decentralized AI security. Shows the need there.
Security for AI makes sense.
Spectre Games got $5 million for developing Telegram games.
Telegram games. Interesting niche.
Astria raised $5.5 million for shared sequencing technology. And Carrick Network pulled in a big $48 million round for restaking infrastructure.
Restaking is huge right now. That's a major investment. These rounds tell a story about where VCs see the next wave, huh?
For sure. They're funding foundational tech and emerging areas like AI security and restaking.
Got it. And looking ahead, any important TGEs? Token generation events coming up?
Yep, a few in the next week. NodeOps, ticker ONODE on June 30th. Decipher, DSCI, is confirmed for July 1st.
Okay.
Barvis, which we mentioned earlier, also July 1st. And AITV, an AI streaming network token, TGE, is July 1st too.
Busy start to July then.
Seems like it. The report also mentioned a couple of recent launches that looked promising.
Oh, yeah. Like what?
Megalio had a public mint. Report says it had proper fundamentals and community backing. Suggests a solid foundation.
Good to see.
And Fragmetric confirmed a 100 million token airdrop. And XO got listed on Binance Alpha, apparently with strong institutional interest.
Binance Alpha listing and institutional interest usually signals some credibility, or at least good connections.
Often does, yeah. Suggests they've done their homework.
All right, let's get to the brass tacks. Prices, targets, market analysis. What are the numbers saying for the big dogs?
Okay, let's break it down. Bitcoin, BTC. Currently around $107,450. The target cited is $115,000.
Driven by that institutional buying we talked about.
Seems to be the main driver, yeah. Support level is pegged at $105,000. Resistance is the all-time high, $111,814.
Okay.
Ethereum, currently $2,426. Target is $2,800. The big catalyst there is the potential staking ETF approval.
Right, the ETF narrative. Support and resistance.
Support around $2,300, resistance at $2,500.
And Solana SOL?
SOL, currently $144.36. Target is $180. Also getting a boost from ETF approval momentum, even if it's further out.
Makes sense. Support resistance for SOL.
The support at $140, resistance at $160.
So the overall market outlook, according to this report, sounds pretty positive, accumulation phase.
That's the gist. Strong institutional flows continue, $578.65 million combined into ETFs just this week. The expectation is this accumulation continues, potentially leading to breakouts above those resistance levels soon.
Okay. And did the report mention any specific trade setups, like risk-reward plays?
It did. It listed a few best RR trades using Bybit USDT perps. Those are perpetual futures contracts.
Gotcha. Examples.
Okay, a BTC long. Entry suggested between $107,000 and $107,500. Target $115,000, that's about 7.5% upside. Stop loss at $105,000, roughly 2% downside. That gives a risk-reward ratio of 3.75 to 1.
So potential gain is almost 4 times the potential loss. Pretty good RR.
Exactly. For ESLL long, entry $143 to $145, which is a nice 25% upside. Stop at $135, about 6% downside. That RR is even better, 4.2 to 1.
Wow, yeah. Any shorts? Counter-trend plays.
One mention, a short on HYPE, entry $36 to $37, target $32, about 13% downside, stop at $39, roughly 6% upside risk.
RR there is 2.2 to 1.
Okay, so mostly bullish setups, but one counter-trend idea. Useful context. What about things that could change the picture, like major token unlocks?
Always important to track unlocks, yeah. Hyperliquid has a big one coming. 67% of its total supply unlocks in late 2025 and into 2026.
67%, that's huge. Could definitely create sell pressure down the line.
Something to keep an eye on for sure. On the flip side, Eclipse has an interesting situation. Team members are legally blocked from claiming their upcoming ES token airdrop.
Why is that? Seems designed to prevent a big insider dump right after the airdrop, kind of a value protection mechanism. Clever.
Yeah, interesting mechanism. Okay, finally, let's zoom out. Macro events. What's happening on the bigger stage that impacts crypto?
Several key things. U.S. crypto legislation confirmed for completion in September. That could bring much-needed clarity.
Huge potential impact there, positive or negative depending on the details.
Absolutely. Then there's the FHFA directive. Fannie Mae and Freddie Mac are now supposed to consider crypto assets in mortgage assessments.
Whoa, that's mainstream integration, potentially, even if just exploratory.
It's a step. South Korea is moving forward with a formal bill allowing banks there to launch Bitcoin ETFs.
Another major economy opening the door to traditional finance involvement.
Right. And as we touched on earlier, the EU confirming acceptance of zero-knowledge tech for privacy applications. That's big for privacy tech globally.
So regulation moving forward, more traditional finance integration, key tech getting acknowledged. Feels like crypto is really weaving itself into the established systems.
That's exactly the picture it paints. A world where digital assets are becoming increasingly interconnected with traditional finance and global regulations.
Wow. Okay, we covered a ton there, from BlackRock buying up Bitcoin and SharpLink staking ETH to projects like Axiom actually making bank.
To the cutting-edge stuff like AI infrastructure and the privacy comeback,
Plus all the regulatory shifts globally, the funding rounds, the price targets. It's a lot.
It really is. But taken together, these insights show a financial landscape that's just evolving incredibly quickly. Driven by innovation, yes, but also increasingly shaped by traditional finance and, maybe most importantly, by government policy.
That interplay is key. So here's something to think about, building on all that. Considering how fast both the tech and the regulations are moving, almost in parallel, how might these developments fundamentally reshape our very idea of financial privacy and even asset ownership across the globe in, say, the next 10 years?
That's a deep question. A lot to unpack there for the future.
Definitely something to mull over. Thanks for breaking all that down.
My pleasure. Always fascinating to see the data.